Welcome. You've just entered the trading pit, your home for sophisticated takes on the crypto markets. It's March 5, and here in the studio, JJ and Ben Lilly of J Labs. Today's top story, well, it's all about the meme coin rally. I know that Bitcoin is on the doorsteps of its all-time high, but the meme coins have gone crazy. You know, the market's looking for signs that this rally is coming to an end, and often that ends with a meme frenzy. And all the signs are around. Just in the last 7 days, the three largest meme coins by market cap are up. We got Doge up 97%, Shiba Inu 308%, and our lovely Pepe 254%. And yet that's not enough. We've also seen the second most expensive CryptoPunk ever being sold for 4,500 ETH, or just over 16 million. So, Ben, are these signs that the market is gearing up for a strong correction, maybe even the dreaded 20% pullback?
Ooh, you know, things are getting weird. It's a reminiscent of the end of 2020, early 2021. If anybody remembers that time frame, we had insanity in price action, gamma squeezes were happening, and it was just reminiscent of what we're seeing today. And as far as pullbacks are concerned, I mean, even if we do have a pullback, it's not like the bull cycle's over. So
yeah,
you don't need to have that mindset. If anything, just protect yourself a little bit to the downside. Don't forget to get a little bit of dry powder for when those opportunities continue to present themselves, and just, you know, be ready. This is a marathon. It's not a sprint. If you miss something, there'll be a new opportunity springing up next week.
Well, I have to say, you know, we have so much data that we've been able to look at, either looking at the on-chain information that's come in, that all the analytics have been built out over the last couple of years. But, you know, this year alone, right, we now have all the ETF flows. I'm looking at the data from yesterday, another major day, 562 million incoming net flows. And that even includes the 368 million that was coming out of GBTC. Both IBIT and Fidelity had over 400 million. So I think, you know, you look at the meme frenzy, this common indicator that, hey, we've reached a local top. And then I contrast that with this information. I think it does breathe some caution. It does seem to say, listen, there may be a pullback, but man, we continue to see massive demand.
Absolutely. And, you know, the way to think of it is that Bitcoin and Ethereum, you know, those are the two largest tokens by market cap. If that's your collateral, you know, think of it like almost a house. Like, TradFi is going to continue to pump real estate prices, and you don't really want to be short real estate. And from there, open up home equity lines and essentially go ahead and tap your collateral as you need to. And if you look at the crypto market, if TradFi is going to continue to do that through these ETFs and Bitcoin, Ethereum, have that be your base, have that be your collateral, just like a home, and then go ahead and act from that pile. Take your small little swings here and there with little 2% of your portfolio in terms of size and position. You know, have your stop losses set, or go ahead and hedge yourself to any downside price action, kind of in the same sort of manner, and go ahead and just play the game from there. Just let them continue to do what you ultimately want to see, which is just have them pump your bags.
It's a great point. Bitcoin really is like the millennial version of real estate, right? Except it's liquid, highly liquid real estate.
I feel like we're pumping Michael Saylor's meme that it's all real estate. It's like buying real estate in New York 100 years ago.
Yeah.
Oh, boy. Well, speaking of meme coins, we're going to move on to perhaps the biggest meme coin of all, which is MicroStrategy. It experienced a 24% increase day over day and closed at over 1,300. I think that's its all-time high, or near all-time high, going back all the way to 1998. JJ, what is this telling us? Is this another signal of a pullback? I mean, what's going on with this meme coin?
Well, if we look at the chart here, it's actually pretty far off those .com bubble highs. I think those are around 3,200. So,
oh, they're even higher. Okay, I had my information wrong. All right,
it looks like a half pipe. Just waiting for the Tony Hawk in drop here, but it could get a lot weirder. I think right now it's probably nearing the end of this current squeeze. But this is just kind of reflexivity of markets, is that MicroStrategy's ultra levered with Bitcoin. You had a bunch of people shorting it. If we look at the short interest on it currently, I believe it's still around 20% of outstanding shares are short on this. So there's a whole lot of people that have to cover. They didn't want to cover throughout the past year. Like, even as Bitcoin was going up, they refused to cover these short positions. So there's currently over 3 million shares outstanding. So 3 million times 1,334 is a lot of money, 20% of the float. There's just a lot of people trapped into this position. And what we saw is they had to buy ultimately calls to hedge those positions because they didn't want to buy back the shares over the past few weeks. As they buy the calls, that kind of created a gamma squeeze with the dealers, and it just kind of creates this reflexivity price effect where price just keeps climbing higher. Because ultimately there's not many people selling it, and there's a whole lot of people who have to buy it as price keeps climbing up. So it's just kind of, as Bitcoin moved up higher and higher and got towards all-time highs, that seemed like an outlier scenario for the people that took these shorts and something they weren't planning on. And it just obviously went parabolic, especially over the past week or so. It just keeps getting more and more steep there.
JJ, I want to ask you, can you break down the whole setup that's happened here, that's transpired? Because I know you and I talked offline about the fact that you had a bunch of people that piled in on this, and we've talked about it on the show before, but I want you to answer two things. I want you to first outline exactly what happened with this trade, sort of the chronology of events, and then I want you to talk a little bit about its impact on recent price movements. Is it having an impact on what we're seeing with Bitcoin, or is it just something else that's happening at the same time? So start off with the background a little bit.
So obviously 2020 came, saylors started adding BTCs to the balance sheet in August 2020. So at this point, they started adding Bitcoin. You see the results here. And basically anybody who was short MicroStrategy got blown out at this top in 2021. And then as it came down and Bitcoin entered the bear market throughout 2022, we saw a lot of short interest enter. And these shorts had ample opportunity to close. Obviously, it was down as low as 130 in January of 2020 or 2022. And then they didn't close. So there was just like, I could not understand it at the time when after FTX and whatnot, MicroStrategy had something like 35 to 40% of shares short. So that just showed like they actually thought this thing was going to zero. And as Bitcoin proved it wasn't going to zero and it started climbing up, it became obvious that, hey, Saylor structured this debt intelligently. He's not going to get liquidated. There was still no rush to close. So even throughout, we had the BlackRock ETF, right? And that sent MicroStrategy up to 482. This was kind of your warning signal. If you were short, hey, the tide's turning. They didn't close. Then again in October, hey, like this is going to get really weird. People still didn't close. Then I even had that drop down in January. People were doing a pairs trade where they said, hey, I can long. Now if there's an ETF, I'll just long Bitcoin and I'll short MicroStrategy, and this premium is going to go to zero or negative, and I'll be able to collect all that. Well, it turns out that's not true. MicroStrategy's pivoted their business model, and now it's kind of viewed as a growth company, right? So like the same way you see tech stocks that don't necessarily have a lot of operating value, there's the potential they can have value in the future, so people are willing to invest in it in the hopes that they do turn in profitable in the future. So now the narrative's changing around it. It's not just leverage Bitcoin beta anymore, it's that. So you see this kind of, after they announced that at earnings, it's just basically gone up in a straight line since, and they're still not covering. So the effect of that is you have two options. If you've been short this, you either have to buy your shares back, which they haven't done, or you have to buy calls to hedge. So as they bought calls to hedge, that made the dealer short those calls, and then more people start buying the stock. More people were buying calls, just speculating, and that kind of create this just ultimate reflexivity event where price just squeezes and it reaches a point where there's not anybody willing to sell it to you, and you have to cover the short position one way or the other. So what do? You have to keep buying more calls, and that just ultimately makes it a bigger squeeze. And that ultimately culminated, whether or not this is the top, who knows, but yesterday it got pretty extreme, especially over the past week. It's gone from like 670 about a week ago to over double. So that just shows how quickly these things can unfold if you don't have a plan to get out.
Yeah, unfold is right. I'm looking at pre-market price, and it looks like it's down a little bit. 1334 was yesterday's close. It looks like it's down to 1235 in pre-market action. So I imagine we could see a bit of a pullback there. Let's get into that second question I was asking though. If you look at this, is this at all driving anything that we're seeing on this rally on Bitcoin? Is it the opposite? Is MicroStrategy benefiting from this rally in Bitcoin? I already mentioned the ETF volumes that are coming in. Again, just yesterday we had 562 million net inflows taking Bitcoin. Walk us through, in your mind, is there much of a narrative there, or is it really just coincidental that it's happening at the same time?
No, I don't think it's coincidental. So what MicroStrategy's been doing is they issue shares. So if he feels the stock's getting overextended, it's overvalued, they can sell those shares and ultimately buy more Bitcoin, which adds more value to you see like that kind of relationship as Bitcoin or as MicroStrategy goes higher, they can sell the shares and ultimately put that into value, which they see anything over under 100K is value to them in terms of Bitcoin. So they'll sell the shares at an overextension and then buy more Bitcoin. And then as Bitcoin goes up more, it makes the stock go up more. It's just kind of this feedback loop that's basically never ending. And I don't know where it ends. I think it's going to get a lot weirder. Basically, at some point, these shorts are going to have to close. I don't know. Maybe they'll be lucky enough to get kind of a reset. Maybe Bitcoin falls back towards the 50,000 range in the near future, and they get a chance to close below 1,000. I don't, or they might just capitulate and send this thing to $2,000. It's really, I wouldn't be taking any bets on it, but it's just going to be fun to watch.
Yeah, it's wild times, wild times. Well, speaking of Bitcoin, I want to get into the next question about that, which has to do with the amount of float, the available Bitcoin, and what's sitting on OTC desks. So, Ben, I'm going to ask you about that in a minute. Before I do, I want to say hello to Marchin 251 Legacy Trail, holding tonight. Hello, world, and Paul. We see you from Poland. We got people from Germany. We got people from Toronto. Man, it's an international crowd. Love having you here. Hit the like and subscribe button. Say hello. And let us know what questions you have. We'll see what we can answer today. But Ben, let's come back to this question of OTC. There's been a lot of speculation, and I think a lot of it is just memes and jokes about the fact that OTC desks are running out of Bitcoin. And, I think part of that narrative is fueled by the fact that these ETFs have accumulated, I think, a massive amount already. I think I saw a figure, it was on Blockworks or the block, saying about 1 million Bitcoin has already been accumulated by these. I think I saw some information, perhaps on Glassnode, there's about 1.8 million sitting on exchanges. And then you have people such as the Bitwise chief investment officer just a week ago said on NBC, there's too much demand, not enough supply. So, Ben, the question that we have is there any sense that these OTC desks are in fact running out of Bitcoin? How would we even know that?
This is a fun part of the market to be an observer of. And I don't participate in this part of the market, but hearing kind of what's happening in rumors and even what Vance said from Framework Ventures the other day of hearing that lending rates on Bitcoin, which is essentially borrowing it for a few days or one day, which is like a kind of a repo market, which we've discussed countless times in Espresso and even on here for TradFi markets. Hearing that it's like 15% is insanity. I mean, it just shows how hard it is to get your hands on Bitcoin. And the problem, this might not really make sense on the surface to some, but if you want to better understand it, go find like a market cap token of like 10 million, super small, right? You got to go to like the fringiest and scariest exchanges in crypto. And I don't even know if they exist anymore. This is like, I'm thinking 2016 and aging myself here, but go see it. Go see if you can accumulate some of those tokens and watch what happens to price. Watch how quickly it responds to just like $50. Like, it's very responsive. And because of that, when you're doing the size at which these ETFs are doing, and you need to go ahead and make those settlements because you have those orders sitting there. People want to go ahead and have shares, and your mandate is that you need backing. Your assets have to match essentially the shares that are outstanding. There is no like, oh, I'll be okay in a couple days, which we've seen some of the villains of crypto try to do and not succeed. They have to do this, right? So how are you going to get your
SPF
hands
is listening
on Bitcoin?
to our show in jail right now. He's shaking his head. He's going, yes, sir. I understand what Ben's talking about.
Yeah. So I can't imagine, how almost the network that they're having to create just to logistically have the Bitcoin on hand to meet their mandates of all the shares that they have to essentially mint and issue. That's a hard problem. Like 15% is what Vance was saying. I've heard, similar numbers from some desks floating around. And, for us, like that data is not readily available. So you can't share it on social media like we, half the time we do with all these different accounts across Twitter. But what can we see? Like, where would we see the ripples showing? Like, that we can find out. And we could see that in terms of Bitcoin being borrowed on Ethereum. So wrap Bitcoin, right? It's just not, the Bitcoin that TradFi is going after. They can't hold wrap Bitcoin. That's not part of their perspectives. But like MakerDAO, right? They have 3 vaults where you can go ahead and lend out your Bitcoin, essentially, just like we were discussing with the home equity line. And that's fully tapped out. And the rates are like at 7%. And so you can already see that Bitcoin as collateral, Bitcoin has more value than ever before. Like, even on the curve markets, we're sitting at, looks like 17%. I mean, these are just competitive rates that you can, it's saying that you can get elsewhere in the market. Like, you don't need to do it here. But it's also has a fact of how volatile the asset's becoming. That's the second part of it. And even on, like, people are either wanting Bitcoin or they're trying to get out of Bitcoin, but having that liquidity of Bitcoin, is becoming a premium. And so the yield that it's starting to earn as a liquidity, an LP position on a swap pool, looks like it's around 36%. Now, go ahead.
Yeah, so Ben, I want to kind of summarize a couple of key points, because we've been asked this a couple times by fans of the show. They've been asking us to answer this question, and I think I share with them what you're hitting on. The fact is, it's an opaque market. There's really not a good sign of OTC. The reason it is OTC is because the buyers and the sellers don't want to create ripples in the price, right, for large transactions. That's why they do over the counter. Otherwise, they would just go to an exchange. So that's why they're doing it. That's why it's opaque. What Ben's done here is some sleuthing, which really tries to see where those ripples are going to eventually show up. They're doing it in the rate markets, which are saying, as they try to expand out and actually get some of the Bitcoin that they need in size, they have to go to some of these alternative markets, and you're starting to see that spike. So I guess, Ben, take us to this next conclusion. Let's say I want to hear what happens if they're unable to actually satisfy this. You continue to have massive amounts. We've talked about, I think the average that they have since the beginning of this ETF is 220 million a day. Is this just going to send price that much higher? At some point, do these ETFs say, listen, we can't find more Bitcoin, so we're going to have to shut off inflows? What are some scenarios here?
Yeah, so the way it's kind of helpful to understand how that works. Like, if you're running a fund and you need to have Bitcoin on hand, you're not going out and hitting the buy button on Coinbase. That's a different job. And somebody else, and that's where OTC comes in. You say you need an order filled, and you'll get quotes. And depending upon the size, and there's essentially spreads being taken throughout. But spreads is fine, because, again, we'll go to that $10 million market cap token and go ahead and try to fill a position on size, and take that dollar number that you had before you started, go ahead and hit the buy button, and try to see if you can come close to that. And you're going to probably get a 5, 6, 7% spread. So knowing that and understanding that, you can see why OTC desks, why they kind of earn that spread, right? That is theirs. And if the better that you're at filling those orders, the better quotes that you can provide, and essentially the more money you can make. And there's market specialists that do that. What happens when they can't source Bitcoin? These spreads get wider and wider. These percentages get wider. As we're already seeing, look, I can get 36% sitting in an LP pool on V3. Don't take that to heart, because on V3, those yields aren't going to be what it's advertised. If it was V2, that's a different story, but I don't want to get in the nuance there. But if you're going to lend it out, for example, and get 20%, okay, so these rates eventually become prohibitive. The quotes that OTC is quoting become prohibitive. And so that's essentially that exhaustive point in the market. And it's funny is pulling up just this yield chart here on this pool, and we go ahead and pull up the date of January 11th. And then we go ahead, and this is some alpha I don't really like to share too much. So listeners, here you go. Go ahead and pull up what happened last time around, and you can see we kind of had a blow off top when yields start to get excessive. So do with that what you will. These yields, they essentially push buyers back because it's getting exhaustive. It's too much. It has to calm down.
Okay. All right. Well, so there you have some scenarios to try and tell you, paint a picture of the challenges with the OTC desk. Hopefully that answers some of the questions out there. And for all the speculation, it is just speculation. So we'll continue to see, and we'll see it in the rate markets, perhaps in some of the price, if the OTC desks are actually running out of Bitcoin. Okay. With that, let's move into the market update, because I know there's a lot of people excited about the fact that Bitcoin yesterday almost hit its all-time high. When I was looking at this morning, it was trading about 67,600. RSI, though, peaking at 82.7. So I want, JJ, oftentimes we go bit by bit going through this market, but I want to kind of take the whole card. I want you to kind of give us a big picture when we're looking at spot, perps, and options, what we're seeing, and what that's going to tell us. But before they do that, I do want to give a shout out to everyone who's here. Welcome. Thanks for joining us. If you haven't already, hit the like and subscribe button. Share this with as many people as you can who want a sophisticated take, especially as this market starts to heat up. We may have a pullback in the next couple of months. That'll be a great buying opportunity. Or in fact, we may go even higher, which means your collateral is going to be doing something for you. And that's what we're going to be talking about on this show. So if you know people that want to be in the know and figure out how to make the most of this market, let them tune in. And of course, as I always do, I got to mention, as JJ's about to talk options, we're going to be talking about the great exchange CoinCall, where you can start placing those trades. If you haven't already, check out the link in the description. It's a great exchange for options and perps and spot of the majors. And that's the one JJ's constantly highlighting, both on his options videos as well as on here. So if you want to start that options journey, start getting prepared to actually be able to trade for some of these amazing opportunities that will be happening now, soon, and in the next 18 months. Now's the time to start doing some of that practice. So I suggest you go check that out. And with that, JJ, I'm going to come back to you. Start walking through the market. Start telling us again, big picture, what are we looking at? Are we going to hit the all-time high? Is it time for a pullback?
That's a good question. So obviously, it's hard to believe that, but a week ago, like 1 week ago, we were at 50K. 1 month ago, we were at 40K, right? So just to put into perspective that any pullback from here, it's going to be for buying, right? Like, and you shouldn't be kind of all in expecting this all-time high just to come tomorrow. It very well could, but you should have a plan in case it doesn't. One thing that I was looking at this morning is just liquidation pools. So these are 100x liquidation pools that have entered within the last week. And we could see this could go all the way down to 54K. And that's still higher than we were a week ago. And it could wipe out all of this leverage here and then continue on to all-time highs. So you should frame everything within the perspective of that we could get a pullback that deep and still continue on to all-time highs. Nothing's changed, big picture. So don't be putting all of your eggs in one basket here in perp trade, expecting, hey, this is going straight to 80K. It could, but just recognize where we are on the map, right? But however, we zoom out, we see that there's basically no resistance above here. So very well could just be a break above 69K and we go straight to 80K from there. Because all the things we've been discussing, there's just this overwhelming, insatiable demand from these ETFs. And they don't care about perp pools. They don't care about liquidations. They don't care how overextended it is. They just want exposure to this thing. So that's the X factor to be aware of here as things progress, is that it can get a whole lot weirder in the short term. I think we're starting to see some signs of overextension, certainly in the perp markets. But again, what that kind of incentivizes is people to do cash and carry trade. So if we even look at the basis, we see that's basically as high as it's been in recent months, which means you can enter a long position in spot and just capture this annualized basis of 30% plus just by holding your spot and shorting perps against it. And that's a risk-free trade. And I think a lot of people are taking advantage of that right now. So it's something to be aware of. I mean, it's anybody's guess what happens from here. It looks certainly bullish, but again, a wick down below 60K isn't off the table in my perspective. I think that's something to be planning for.
JJ, I want to break in here and ask you a question about that. I think for longtime listeners and anybody who's studied the markets for a long period of time, you're accustomed to the open interest being a warning sign. So we talked about warning signs at the beginning of the show. That's where you're seeing the meme coins come in. They're starting to perhaps signal that people have moved out into the higher risk areas. We're looking for a pullback. I look at open interest. It's at 18.6 billion. The last couple of shows, it's been 5 billion less than that. I think the short-long ratio of 56-44. And then I look at some of the liquidations. We had about 132 million in liquidations and the majority of that, well, just over 60% looks like it was on the short side. So is that going to continue to be a good signal for the market? Will you start to see this heating up, or is it overwhelmed by these ETF flows? If the ETF flows stay strong, are
they can. It's just like there's always offsetting short positions for new longs, right? So it's definitely getting frothy. There's a lot of FOMO. At some point, we're going to see like a 20% liquidation run to the downside, whether that happens now or after we move up to above 70K. But you should have that in your mind that it's going to happen, right? Like this kind of the amount of open interest that there is now, it's not going to sustain forever. There's going to be a wipeout period. And ultimately, that's kind of your cue to get long when you see that wipeout. You don't want to chase leverage long at this altitude because it can reverse on you so quickly, right? So just be aware of that. I don't think it's necessarily a top signal. Like in 2021, things were extremely frothy, basically the whole time up above all-time highs, and it just kept moving back and forth, but perpetually going up. So like we saw last night, I think we were at like 68.5, and then it wicked down to below 65 in a couple minutes, and look now, it doesn't even matter. But if you had a heavy long position, you got wiped out. You're out of the game. So just be aware, like the price is going to move in wild ways, and we're in a new era of expansive volatility, right? So that means price is just going to continue to move in wide ranges throughout the course of a day. And if you're not properly hedging yourself or protecting your positions, they're going to get hunted. So be aware of that. And ultimately, also be aware that there is going to come a time when there's that massive liquidation candle to the downside, as we've seen so many times throughout Bitcoin's history. But yeah, like there's no denying, like this is extremely bull. If you're just chilling in spot, you have a little bit of some kind of derivative exposure, you're hedging yourself one way or the other. It's just a beautiful thing. Just keep riding it.
It is a beautiful thing. We do have a question here, which I think I'm going to put to Ben from Kyle Hawkins. So is the liquidity crisis no longer on the table? And the liquidity crisis, I think for the listeners who haven't heard that before, that's this notion that we're going to see liquidity more, the macro environment start to dry up. And we said as early as March, maybe April, and then a longer term one where we start to see collateralization of treasuries and sovereign debt, and that's a bigger picture thing. So Ben, back to you. Do you still see the liquidity crisis on the table, and thinking about it from these ETF flows, what do you think the impact would be?
Bank Term Funding Program will cease making new loans as scheduled on March 11th, 2024. So that's T-minus 6 days. Now, I referenced that because the repo market was getting tapped pretty good the past few days. So this week, it's sitting at $439 billion. And basically this last week, it was looks like they tapped it for about $130 billion in less than a week. That's a lot. It looks like some of it had to do with long-term duration based upon what the yields are doing over there. So they're essentially just taking money out of one pocket and paying the other pocket, and they're doing it a lot more than they have of late. And now we have the program starting to expire, and I haven't heard it fully addressed yet. So will that be addressed this week? Will that be addressed next week? It's funny that question comes up because as JJ's talking, I was sitting there looking at all of those things to just understand the timing of it better. And I don't see it. This is the important part here. What's the market's expectation? And if we go ahead and pull up March, we see that they're expecting, it looks like no change in rates, like across the board, 98% probability. When the market comes to consensus like that, it tends to be wrong. So it's a worry of mine for sure. And it hasn't gone away one bit, right? But we just tend to put blinders on because the number's going up at such a velocity right now that we tend to forget everything else that's happening around us. And the DXY, I know JJ loves looking at that 50 RSI. I think it's sitting right on it. So which way is it going to go?
Yeah.
We'll see. I don't know what it's doing on the weekly. I didn't look at that.
There's so many interesting things happening macro. Like we see gold going up too. So I don't know, like maybe this is the market pricing it. It's either getting ahead of itself or it has inside information. That's always kind of what you have to look at the lens through, right? Like, do the people bidding up gold right now know something in terms of what they're going to do with the rates, or are they just blindly speculating? And we're in the midst of a fervor right now where basically every asset in the world is just getting bid up and the bubble's going to pop, right?
I'm not going to give the gold bugs any any credit for having inside information on what's going to happen with the
Somebody's
rates.
pushing it up, right? It just had its
Yeah.
highest weekly close ever, right? So that it's something with that enormous of a market cap. There's somebody pushing this thing with serious money, and that's
Sure.
something to be aware of. So like it's definitely a macro signal to keep your eye on. But in terms of DXY, it's not dead yet, right? Like it's not below any of these major key support levels. It's still above the 200-day. It's above the 50 RSI. On all of these time frames, it looks like it wants to break down, but will it? Like there's always that kind of grim reaper in the corner that they could come out and say, hey, we're hiking rates another whatever 100 points, and then you just see that mass liquidity event happen overnight. So
Okay, well,
right?
well, hold on, Dixie. So Ben, I want to come back to you. You know, in terms of this liquidity event, right? We have a couple. It's multifaceted, right? There's expectations of what the market's going to do. We could have some economic data that comes out that sends the Dixie in one way or the other, right? At the same time as liquidity starts to dry up, so all that could factor in. What's your perspective now? You know, are you putting a percentage on this happening, or are you more looking at it kind of day to day, week to week, to try and see, okay, we're getting closer to a trigger point?
The silence is like ominous right now.
Yeah.
And there was a lot of chatter about a month ago on how they're going to address it. And because it's silence now, it's like, okay, we have a solution on hand. We're essentially ready for when this moment takes place. BTFP is coming to an expiration next week. DXY on the weekly is also sitting at the 50 RSI, and all the mentions on gold. I mean, it's kind of like, you got to be aware of it. And this is like the Grim Reaper. We're all just focused on this one little corner of all these assets that exist in the global market. And we are not really looking behind us to see if something's coming up. And you have to keep aware of this, because the point we made earlier on the cost to borrow Bitcoin, you know, this is driving the market. Okay, what happens when you reverse the flow? Like the speed at which it's going to go the other direction, we might have never seen that speed before, because this is essentially programmatic, like just firing off shell after shell coming from these ETF flows. If they don't need to hold it, I don't know if they're going to hold it. And we just discussed how hard it is to go ahead and take Bitcoin out of the market to do what you need to do in terms of issuing shares. What happens if you unload that Bitcoin? I know this point was made by somebody about a month ago about the reflexivity. You know, if it starts to go negative, how quickly does that hit? It's something to be aware of, right? When we talk about downside risk, like 20% is not an overstated amount. 30% should still be on your radar. And this volatility is not necessarily a negative thing for TradFi. Right, this is okay. The asset's still early. We're still going to have these swings, but look, you just do 1%, 2% allocation of your portfolio over the long term. Yes, this is highly volatile, but this is the payoff. If anything, it might strengthen their selling point. So, you know, things are good, right? Things are very good. Let's not lose focus on everything else going on, and let's not lose focus on how quickly things can reverse. So you really just got to be aware. Really, Ben, I mean, we're still so early, right? We haven't even hit the halving yet.
Yeah. Well, I was just saying, Ben PSA Lilly just came on there and asked everyone to keep your exuberance and excitement in check, because the reverse can happen very quickly. So I think, to come back and summarize here, this liquidity event isn't off the table. The fact that there's silence suggests that there may be a solution, but we don't know what that is, and we don't actually know what the impacts are. I know a couple of questions in the comments section are asking, well, what's going to be the impact? We've laid out the impact a couple of times. It could be a massive sell-off, and then leading to a massive buy opportunity, but we don't know. We got to continue to monitor that. So I think that's something we continue to bring up on this show. I do want to talk a little bit about positioning. We already covered the Dixie a little bit, so I'm not sure there's a lot more to do there. I think before we talk about positioning, though, we did have a question here from Hello World from Toronto. Hello. BVol is slowly creeping up, but is still low. Do you factor this into your thesis on the frothiness of BTC price? JJ, I'll put that to you.
So BVol, we look at it, it has been extremely slow, but this, again, it looks like it's just ready for liftoff here. You see how tightly compressed it is. It looks like, I mentioned this to Ben last week, it looks like a project that's been abandoned, but it's just a measure of
we know what those look like.
Yeah, rolling volatility over the course of 30 days. So I think we'll see this either break above 70K, you'll see this start to rise up extremely, or if we get that wick back down into the low 50s, that'll definitely increase the 30-day annualized volatility rate. So it's coming. Like we're firmly in a high volatility environment now. Over the course of the past 2 weeks, that's solidified that this is it's not the 2023 market anymore, right? That we're not going to see these slow grinds any longer. It's prices just going to be moving in a wider range as price moves into wider ranges. So be prepared for that. And we see that
Don't
obviously.
confuse that with an SPF asset.
Yeah, exactly. This chart is going to rip when you least expect it, essentially. And we look at the implied volatility; it's been shooting through the roof. Options, obviously, as we've been covering, have just been going ballistic over the course of the past couple of weeks. That said, it looks like things are getting a bit frothy in the options market. If you want to move into that, we look at the term structure chart here. So we see that March 5th, today's expiry is up at 87 implied volatility score, and then it's inverted here. So this is kind of a signal that the options market is stepping in to sell some shorter dated upside and hedge all those calls that we've been covering, which are in the money now. So people have been buying calls from the 40,000 region all the way up through 60. Now those calls are in the money. How are they hedging it? They're taking advantage of these extreme premiums and selling out of the money calls, or calls that are less in the money than their core positions, to capture that volatility over the course of the next month or so. In case there is that downside, they'll just collect that premium, which will allow them to get more long over the course of the long term. It's been interesting. If we look at the top option flows, we see a lot of 75K call selling for June, and this is probably some form of indirect profit taking. Same with March. They're just selling further dated strikes, collecting that premium if it expires worth it. If it moves up, good, they're covered anyway. They already have the core positioning, so they'll just end up making more money. They're just positioning themselves for moves in any direction here, expecting.
When you know how to play the options market, you got a lot of options. Not to find a point on the wording there. Okay. I want to take us into talking a little bit about positioning, because I know a lot of people in the chat are asking questions there. And we talked a little bit offline, Ben, a little bit about L1s. JJ, want to come back to you and talk a little bit about maybe some options, especially if we start to move into a new regime. I know you have a video coming out on that. So I want to talk about it's coming out this week. Yeah, we're setting up a premiere for this Friday, I believe, is what we're going to be targeting. And you're going to be talking, I think, if I'm not mistaken, you're going to be talking about moving between these regimes and how to think about playing options as you move between these regimes. Is that right?
That's right.
Okay. So, like I said, we got a couple of questions from the audience. For all those who are out there, thanks again for joining us. If you haven't already, hit the like and subscribe button. And again, share this with as many people as possible. And I know we're going to be going over options in a moment. Again, as I'll say, there's always the option for you to start trading on CoinCall, the platform that we're always highlighting on this show. Great interface, very elegant interface, easy to use. We're trying to simplify it for everybody who's just getting into the market, where you can start trading options and be prepared for these moves that are going to really present amazing opportunities. JJ said it several times, don't underestimate the number of opportunities this market is going to give you. So definitely something to consider if you're in a jurisdiction. It sounds like many of you from Germany, from Poland, from Toronto probably can use that tool. So, okay, I want to bring us back. Ben, I want to start with you. There was a question here. The question, I think, was, what are your top 5 altcoins? And I know we don't usually talk specifically. We're not a show that's hunting down altcoins. Our method is a little bit different. So talk a little bit about what you were seeing from an L1 perspective.
Yeah, man, asked me 4 years ago what my top token altcoins were, and I would be able to rattle them off any day, any hour of the day. Like, that used to be something I track continuously. And I think, if anything, my mindset has changed a little bit for, you find the opportunity when it presents itself instead of trying to go kind of hunt the gems. That used to be my mentality. But as far as like what I'm seeing, meme coins over the last kind of day, 24, 48 hours have been starting to cool off. And if there's going to be a rotation, this capital is going to continue to seek more opportunities. And you think about when all these alternative L1s started to run, they were one of the first legs to really happen here. And kind of going through some charts just briefly this morning, I noticed that a few of these tokens, they haven't really breached the kind of their God, I forgot, it was like Adam and Eve pattern when it breaks out kind of over this resistance. Like this is DOT. Like as far as like the fundamentals of DOT, it's kind of beaten down. A lot of the developers left. They had this conference last year, and then shortly after, I think the foundation just laid off like 30% of all developers. And so as far as like Polkadot as an ecosystem, it's not doing that well. But you look at a price chart, 80% of the markets probably doesn't even know that news or what took place last year. You look at it, it's already trying to take out this gap and kind of see some upside. And I've seen this similarity kind of happen across various tokens, like Atom right there is getting ready to want to go do the same thing. Near this isn't, I think I have a Coinbase chart here, so it's not really able to see it. I think Algo was making a run. Yep, see, kind of similar pattern. A little bit of inverse head and shoulders taking place here. I think Tezos, was that doing something similar as well? Yep. That, and I think Phantom already broke. Yeah, that already broke its gap. But you're seeing this throughout. These are tokens that have a lot of volume. So kind of going back to conversation earlier of if you need to go ahead and get into a position or even out of position, you kind of seek liquidity, you seek volume, you seek these higher market cap tokens. And this presents opportunity to essentially get in, get out, and move around if kind of in the later stages. Like these are kind of like Dino L1s, if you will. I mean, even there's some L2s that are showing similar setups. I think Cello was an interesting one because I know we were talking about L1s here, but Cello used to be, actually kind of is a L1 still, but it wants to be a L2 on Ethereum, and it's starting to build that up. But yeah, here's Cello's chart, similar pattern. Like I wouldn't be surprised if a narrative hits on that in the next few weeks. But yeah, I'll be looking out for charts that have that sort of similarity.
Some good opportunities, some good buys, even in a frothy market or what is potentially a frothy market. Okay.
Jump away from altcoins here, but check out what's going on Coinbase. So we see Bitcoin moving up to 69 just about. It's knocking on the door, but look at this ask wall. So it's going to be very difficult for price to get above here unless this is removed. It's going to have a hard time just eating through this unless we see some insane buying volume to break us through all-time highs. But this is kind of the bear's last stand is this wall. So
the Bears' last stand. It's incredible. We've talked about the narratives on this show and just talking about the fact that we're expecting a pullback. I know a lot of online analysts have been saying we're looking for that 42K range. And now we have the Bears' last stand. If we get into price discovery and it just goes above all-time high. Well, JJ, I want to ask you, what about from an options perspective? Do you see some opportunities? I think you've preached caution on this show, right? The fat swings are going to happen. Oftentimes when you're in this market and you're trying to take too many swings, you're just going to strike out and you're just burning up capital. But do you see anything right now from I guess you can answer that from two positions, right? Let's say you already have a position in the market and you're profitable. What are you looking at? And then let's say you're on the sidelines, right? Is there something that you could see that is a really good pitch to take? So let's start with the first one.
The premiums are so insane right now that there's plenty of opportunity if you know how to manage it. If you already had a position, you could look at these March calls that are out of the money and you could sell a $75,000 call expiring at the end of this month for $3,000. That means price would have to expire at the end of March above 78,000 and change for you to lose money on this position. If Bitcoin closes March at 70,000, you collect all of this premium and you could do it again. So things are getting so overheated and the demand for options is coming in so strongly that there's those opportunities to buy hedges to the downside. Like we were saying, Bitcoin was at 50,000 a week ago. Now you could buy a $55,000 put that protects your downside below 54,400 for $600. Just a week ago, those were trading for thousands of dollars, right? So there's a lot of opportunities to hedge yourself from that perspective. Just if we look at March, if you had no position, there's some clever things you could do in terms of selling in the money premium to get yourself some longer exposure. So if we look at, say, $55,000 calls expiring in June, those are trading for $21,000. This means that Bitcoin would have to be above $76,000 in June for you to lose money on this. You could do something like selling these calls and then buying shorter dated calls to hedge yourself at like a 2-to-1 ratio, where you could say, okay, so my break-even price on those June ones I sold is 75,000. So I could basically go to April expiry in case there's a massive run up before the halving and buy some $75,000 calls at like a 2-to-1, 3-to-1 ratio and really juice your upside in case we get kind of that outlier scenario to 100K. It's all very high risk, but there's a lot of potential here due to how steep the premiums now are, where you could do some clever things using just the premium you collect by selling contracts and hedging yourself in different ways, buying those cheap puts, because basically nobody wants insurance right now. Even though we're knocking on the door of that massive resistance wall that we just pointed out, nobody's hedging. So put premiums are very cheap just for March. I don't think that's a bad idea. Even if price goes above 70, the risk reward of a reversal to just 55,000 or so, these would print massively. You buy a $56,000 put, price goes to 50K, this $700 of premium turns into 6,000 and change. So there's always those opportunities and options to find like these mispricings in the contracts and capitalize on it. Too much information.
Good setups. No. I think for all those listeners who do have questions here, a couple of points I'll make. We're going to have a replay. That's one of the reasons we put this out the day after. And so definitely go check that out. You can slow it down, replay it a couple of times to really understand what JJ is going through. I know I oftentimes ask him questions offline to kind of make sure I understand exactly what he's saying. But beyond that, this is the reason he's putting together his options videos. We have one coming out this Friday. Keep an eye out for the premiere. Definitely put it on your calendar. It's going to be talking about the next phase and how to think about trading that. And as the phase goes on, as the market continues to go on this year, we're going to continue to come back to that, talk about these different frameworks for trading and for thinking and finding those good premiums in the moment. But with that, I think we're going to wrap up today's show. I want to thank everyone for coming out today. Kind of a historic day, I suppose. A lot of people are getting excited about it hitting all-time high. Let me pull up the numbers. What are we looking at right now?
69. We're above 69. Well, we were for a second. So 69,025. That bid wall moved slightly. Let's see.
All right, so we've got it up there. We're sitting there. We're right on the door. We're about to knock on Bitcoin hitting its all-time high. Ethereum still has a ways to go, but it's looking really strong as well. Both those up 17%, 20% over the last week. Woo! So you can't go wrong with that. All right, well, definitely thank you for everyone again for tuning in. I want to thank JJ and Ben Lilly for showing up, dropping the alpha. If you're interested in more of this, definitely hit like and subscribe. Come back. We're here every Tuesday and Thursday. As I say every time, be sure to keep some dry powder. Those opportunities will come. You're going to want to have it on hand. This is Marconi White signing off.